Good afternoon. I'm your host, Masood Gausi. We're here in Lower Manhattan, Nasdaq headquarters, for today's edition of IR Advisory Life. And today joining me is Adam Lazarus. How's it going, Adam?
Living the dream, Masood. Living the dream.
So Adam covers the industrial sectors. So the last few days, last few weeks since October, the theme from a macroeconomic perspective has been interest rates are rising, the markets are digesting the great unwind. We had the biggest monetary expansion in, I guess, the history of the United States or perhaps the world. And it's with the Fed reversing that, it's kicking volatility back into the system, taking liquidity out. So as a result, there's been a lot of volatility. Now, sort of zooming into the industrial space, and I spoke to Jack about technology last week. What are the fundamentals / earnings looking like in your sector?
Okay, so I cover the industrial sector. And for industrials, at least, we're seeing future earnings growth rates. They, at least for this year, they've been helped a lot by the tax cuts. They started out very high, roughly a 20% growth rate. But we're seeing into the 19 that those rates looks to be basically cut in half.
Yeah, wow.
So, and with revenues, we almost look like we peaked back at the beginning of this year at 10% with the for revenue growth rates, and we're seeing every quarter marginally lower, basically going to 4% by the end of 2019.
So that's the current projections as per IBIS.
Yes.
It seems to be in line with the general, or I should say the blended growth rates across all sectors. EPS has been going over the last 2-3 quarters, and perhaps this in the following quarter around 20-25%. Revenue growth approximately 7 to 10%. And it seems as though the industrials are exhibiting the same kind of behavior.
For the earnings growth, yes. For the revenue, more on the lighter side of that range.
Got it. In terms of performance, some indexes are in correction territory, which is down over 10%. What are the industrials and some of the subsectors doing?
Okay, so at least let's go back just to October 1st. We're seeing the Dow is down approximately 5.5%. If we look into the S&P 500 industrials companies, they're down 12%. And if we look in the subsector of transports, they're down approximately 11% since the end of the third quarter.
So that's interesting. The Dow is outperforming the other indexes. Any idea as to why?
Well, it is potentially with Dow theory coming into play. A lot of it, at least with industrials, could see a little bit with tariffs. We could see a little bit, at least with some of the transports. They have oil is a third of their expenses, so the high oil prices is definitely cutting into their profits.
Got it. So interesting you bring out Dow theory, zooming into Dow theory, just for some of our viewers who are not familiar with Dow theory, at a very high level. What is it?
So Dow theory is looking at the Dow Jones Industrials Average and the Dow Jones Transportation Average. If the transports are going to divert from the industrials, we could potentially see either a pullback or it could be a new high. The reason behind it is we could see for when you have raw goods being delivered to being transported, the finished product takes a few weeks, so that lag would usually show in the industrials company. So the transports would show it first before you'd see the sales with the finished product in the industrial company.
Got it. So it's safe to assume that the Dow transport sector is a leading indicator of at least where the Dow Jones will head, or the industrial sector, and perhaps a greater economy. Would that be a fair statement?
Yes, it would be.
Okay. And in terms of historical or precedence, has this held up? Can you perhaps provide some examples?
So I looked at the last couple of years at least to see when Dow theory has held up and the hypothesis does come true. So at least fairly recently, we saw the the transports pull back at the end of September, just before the industrials were pulling back more broadly. And if we look at least the last couple of years, in December of 2015, we saw the transports start to pull back and the industrials follow suit in a little reasonable time. And then the other way, we saw that transports throughout 2014 hit new highs, and the industrials average hit new highs fairly shortly thereafter.
Interesting. All right. In terms of movement in the space with respect to investor types, any comment with respect to the industrial space?
I think it's similar to what we're seeing, at least with the broader markets, that we're seeing hedge funds doing a lot of shorting and selling, and retail buying the dip.
Okay. It's also switching subjects here slightly. It's also interesting to note that the Dow Jones Industrial Average was underperforming the small caps, some of the domestic stocks earlier in the year. I think partly due to, or mostly due to, I guess, the tariffs and the threat of trade tensions heightening. Would that be a fair statement?
Oh, absolutely, yes.
Great. Well, thanks a lot, Adam. Any other comments?
No, it's been a pleasure being here with you, Masood.
Thanks, Adam. Thank you for listening. We're here at Nasdaq Financial District. For more information, business.nasdaq.com. Thank you.